Hello friends, I hope you enjoyed part 1 of our trading psychology video, and in this part 2 I'm similarly splitting this video in many chapters which you can please enjoy at leisure and watch each segment as we go forward. Friends, before I proceed ahead, announcement here. It's been announced that Telegram might just be banned in India, and there are over 5,000 followers we have on our Telegram channel. You need not panic here. We will keep supporting Telegram subscribers as long as there is a single follower we have on Telegram. But we've also started a WhatsApp channel, the hyperlink to which is in the description below this video and in the pinned comment below this video. I had started a WhatsApp group, but unfortunately that will only allow us 1,024 members in that group, whereas the channel will have unlimited followers and anonymity of the members of the channel. Nobody can have your mobile number from the followers list. So please do make it a point to connect with us on our WhatsApp channel here. Now, friends, I proceed further. Your attitude, your traits where trading psychology are concerned will also determine how long you can stick around in a trade. As long as the statistical evidence is still favoring holding on to the trade, but the price is going against you. You're long, price is falling. You're short, price is rising. One of the most iconic movies made in the recent times has been The Big Short. You've seen the character who represents John Paulson, who went short on the US housing market. You saw how he kept on accumulating data which kept on telling him that he should be short on the housing market, but the credit default swap prices were going up, and he kept on shorting more and paying mark to market. That's one way of doing things. Of course, you need to be Mr. Moneybags to be able to fund this kind of trade. And many traders simply tire out and quit their trade halfway through because on the snap quote window, your mark to market loss becomes way too big for your mind to suffer that torturous pain, and you get out. Now, the best way to trade under those circumstances is what I've shown in this video. Trade small, aim for larger price moves. Let me tell you a personal example. I started sharing market-wide position limits of the top 20 stocks on daily, weekly, monthly basis, and the movers on a 3, 5, 10, and 20 day and week basis in a tabulated column, both before the election result time and before the budget time. There was a reason. I was basically giving you the biggest profit you could have made in the calendar year 2024 in this data without violating any SEBI norms, because I'm not supposed to give you stock recommendations. I was giving you numbers where the MWPL has changed a lot or the most, and then going down in descending order on daily, weekly, and monthly basis. All right. I identified a stock which I thought was a plum short sell. Now, I wanted to try out this very theme, and what can be a better subject than my own self. I shorted only 2 lots. Only 2 lots. And as long as the MWPL kept on telling me with the churn ratio, with the TSTs that Vijay, you should be short, I kept maintaining my short positions. Yes, the price kept on going up. Yes, it was a public sector unit. And yes, I will tell you the name at the end of this capsule. It took me over 2.5 weeks of waiting to finally get what I wanted. And yes, like I told you in my options training videos, part 1 and part 2, I did multiple trades. The primary trade was the linear trade in the futures segment, and the secondary trade to earn interest so as to fuel part of the mark-to-market losses and improve the short selling cost was in the non-linear option segment. So it was a slightly evolved or an advanced trade where we used both methods, linear and non-linear, to basically improve the probabilities and odds of success. And on election result day of 4th of June, this stock was the biggest loser on the NSE. It lost, hold your breath, 25% in value from the intraday high to the intraday low. It fell another couple of percentage points on the next day, which is the 5th of June, and the name of this counter is Bharat Heavy Electricals Limited, BHEL. I shorted only 2 lots. But do you know what 25% decline can give you? Yes, initially it was a loss-making trade. I kept on losing money. I kept on funding it. But it did not rise 25% after I shorted it. It did fall 25%. And yes, there was linear and non-linear segments that basically kept on giving me interest and other cost of carry and theta decay that I enjoyed from this 2, 3, and 4-way kind of trading exposure. So this is the kind of mental fortitude will be required from you to be able to make money from this market. And in this video, I also want to tell you how trading can impact your health. How your mental health will ultimately also have an impact on your physical and other health unless you do it right. If you were to tell me to analyze you, I'm not being judgmental here. I'm for the sake of hypothesis we are discussing here in this video. If you were to ask me to judge you, one of the 5 questions I would ask you is, how do you arrive at the trade decision support system? Is it switching on the television? Is it going to your Twitter account or your favorite WhatsApp group where a lot of people are recommending a lot of trades? No offense meant to anyone here, but you don't know whether they are right or wrong. Whereas on the other hand, if you are the master of your own trade decision support system, which means you decide how you will trade long or short and what you will trade. Are you going to trade Reliance? Are you going to trade Infosys? Are you going to trade something else? You are at least owning up your mistake and your profits. So bouquets or brickbats, both belong to you. That is the ideal situation that every trader should be having. Now, does trading psychology help? I swear by it, but let me extrapolate a little bit more on the BHEL trade that I talked about very recently. How do you trade based on statistical evidence, and which particular counter do you finally zero in on? Have you noticed how a lion or a tiger hunts deer? Now, deer is an animal that has a very, very sharp sense of smell. They move in herds, and when a tiger or a lion approaches within smelling distance, they simply bolt, and they are fast runners. So what does a tiger or a lion do? Does it run fast enough to catch the fastest going and big fat deer so that it can have its lunch? Or does it focus on saying, okay, I'm going to nab under my paw the slowest deer? And what do you need to be if you want to survive? You don't need to be, if you're a deer, you don't need to be the guy who runs the fastest to be able to avoid being under the paw of the tiger or the lion. You just need to be the second slowest. The slowest guy loses and dies. All right. So how do we identify which deer is the slowest? Like I said, the ascent, the rally in price will be slower. Remember, all these lessons I have shared with you in this video in the pro-cyclicality of the markets. I told you, go in for log charts. Don't go for math scale charts. Go for log charts, and log charts will start telling you that the rise is slowing down. The deer is tiring of running. It's run long enough. It's been in the chase where it's being chased and running for dear life. Its heartbeat is elevated. His heart is pumping as fast as it can. It's going to fall on its side and say, okay, I'm tired, no more. Number two, MWPL will constantly rise because the retail guy doesn't understand the concept of advanced charting like log charts or mathematical charts. He basically goes in and he's nursing a hangover. Remember, in behavioral psychology, there's something called the recency bias. You know what's when working with you for the last 3, 4, 5 days, you assume it's a pattern, it's a trading system, it's a trade setup. So you continue along the same lines. You think you've found a secret system to make money. It works till it stops working. So recency bias is basically a momentum play. Something that's been going up for the last 2, 3, 4 days, you will see the entire world, Tom, Dick and Harry and Uncle John and Auntie Henrietta also coming out and buying on day 5, only to die on day 6, right? So you will see that the rate of movement is slowing down, but MWPL is still going up. On the day that the price either jumps up or goes up but closes lower, and closing lower is a dead giveaway. And if the churn ratio is very high, do you know what happened from a behavioral point of view? Take a guess. The price went up, the retail took it up. There was a huge churn. Smart money shorted or gave delivery. Price closed lower because the retail couldn't absorb enough stuff. Now this is the mathematical data in the market talking to you. It's not just talking, it's screaming, hey Vijay, sell, 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 sell. And when the churn ratio is very high, on the next day or in the same evening, when you come to my social media platforms on my WhatsApp channel, Telegram channel or wherever, or my Twitter or LinkedIn or Facebook accounts, if you see MWPL fell that day, do you really need any more evidence that smart money sold? You really need to be told all that stuff? By now, if you've known me long enough, you would know what I'm getting at. The retail just got sucked into something which they shouldn't have been buying, and the smart money just dumped on them. This is how the maths in the market displays the psychology of the markets, and this is how you, as a pure psychologist, based on statistical and behavioral trading models, should be identifying which deer to hunt. Not just deer. You've heard about the old saying in Wall Street, of course. Even if it has got lipstick on its lips, it's still a pig. Many a times, many stocks have run fast and become fat like pigs. And then smart money, to make it even more alluring, gives it lipstick to make it look very beautiful. But remember, it's still a pig. How do you hunt pigs? Only with statistical trading models that tell you the trader psychology behind what is happening. Can behavioral science also tells you that traders are being sucked in? Yes, they can. Depending on the success of these two videos, part 1 and part 2, I could make another set of videos which will go into even more advanced behavioral finance and trading psychology videos. But the only thing that worries me is that my friends in the media are right. Vijay, let's not talk about behavioral finance. Viewers will give it a swipe and go to the next one. So I would like to see how my online family behaves with these videos before I go into any further advanced videos. How does behavioral psychology and trading psychology reflect on your health? Hey, the first thing, your face is your mirror. It tells on your face. Many a guy tells me, Vijay, you've been trading for 38 years. You're going to be 58 years old in September. You don't look 58. I'm not taking it as a bragging right. I'm just talking from a behavioral scientist now. Your face is not puffy. Now that is a behavioral science guy talking. Why does the face puff up in traders? Because when you're trading, you get nervous. Your heart starts to beat faster. Top, 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 top. Now you start getting excited. You start getting to a point where you're biting your nails, you're skipping lunch, you're smoking a cigarette. Maybe you'd open your a fridge and get a bottle of beer or whatever it is that you calm your nerves by. That is adrenaline. It's a gland which secretes a hormone called the adrenaline fight or flight hormone. That determines whether you'll fight given an adverse situation or you'll run away from it. All right. But the strain that your body suffers when your adrenaline gland starts pumping out more and more adrenaline, that tells you that you're taking on risk that your body and your mind is not ready to take. Over a period of time, this excess adrenaline will start hitting your pituitary gland, right? And then it'll start giving you cortisol poisoning. Cortisol is another kind of hormone that is made when excessive adrenaline has been chronically been flooding into your body's system. The first thing it does is your face starts to look puffy. Now, there are two ways a face can be puffy. You have belly fat, your fat on the upper body, and you have thick thighs. It's adipose tissue. You're obese, which is why the face is fat. But you will notice there are many traders who have very slim waistlines, very slim thighs, very slim arms, which means limb. Their limbs are slim. They don't have too much of fat on their chest, which means they don't suffer from gynecomastia, or in slang, it's called bitch tits. Men with, they call man boobs. Okay. Now, it's not that, but the face is puffy and the face stands out. It's the largest part, prominent part of your body. 99.99% the guy is a trader and he can't handle the stress of his trades that he's been undertaking. There are, of course, secondary signs. You call for lunch, and that is why I told you, old school gentlemen, when they want to do business together, they call people at their club. The guy will not ask for an ice cream or a dessert. He will be diabetic. He might open a bottle of medicines from his pocket and take a pill. That could be for his heart or hypertension. He could be suffering from high blood pressure. You would notice that if he laughs, he gives out shallow laughs rather than laugh ha 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 large-heartedly and very, very effusively. Why? Because he's asthmatic. His lungs can't take the pressure of excessive garrulous laughter. These are all signs of high cortisol levels in your body. If you are taking trades that are too big for your mind to handle, and if you're suffering from these ailments, please stop. Modify your style of trading, or maybe if it's too serious, give up. That's your body saying, hey, I can't take it, man. Give me a break. The other thing, if you come and meet me and you tell me you're a trader and you're holding your back like that and saying, ouch, my back hurts, I think you're trading wrong. Commodities, which I love trading, and as a matter of fact, I was one of the earliest commodity trainers in India. I trained at many thousands of traders at the multi-commodity exchange, the MCX. Commodity markets are taxing because they open at 9 a.m. and shut at midnight. Now, if you're going to be sitting in front of a screen 15 hours a day, plus 1 or 2 hours before and after to read up what the US market is doing, what Europe is doing, what Asia is doing, your day is going to be 17 to 18 hours long. Mr. Narayan Murthy doesn't know that traders work not 70 hours a week, but a lot more than that. It's a very hard life. Obviously, you're going to have posture-related issues. You're going to get back pains, you're going to shoulder pain, you're going to get cervical pain. But hey, if you come to meet me and you have any of these signs that you have these pains, that means you're not disciplined enough to have taken care of it. You know what could have solved your problem? Just going to the garden, going to a monkey pole or a place, a rod where you could hang and just hang. Your entire body gets stretched out by its own weight. Your vertebra, which are getting compressed because you're sitting for long periods of time, will get stretched by the weight of your legs. And all the nerve pain that you have will get relieved. If you can't spend 5 or 10 minutes, you just need to hang from a rod for 2 minutes every day. Just 2 minutes. I'm counting 10 minutes because you need to walk down, take your ass out of your chair, go down to a garden, hang from a rod, come back again, sit and start typing again. If you can't do that, sorry, you're not disciplined enough as a trader. You don't want to live long enough to be able to trade. That tells me something about you, and it's a weakness. Another question I would be interested in knowing is, what do you eat? Is it dopamine positive food or is it dopamine negative food? Dopamine is that secretion which gives you a feel good factor. It makes you feel good. It makes you feel emotionally charged, courageous, strong, brave to be able to take the stress and strain of trading. Yes, there are kinds of foods that are dopamine positive and dopamine negative. If you meet me at my club for lunch or dinner, and if I see you're eating dopamine negative foods, that's a cross mark where my kind of a checklist is concerned. Like I said, old school. When you meet people over lunch or dinner, you can know a lot from their posture, what they eat, how they breathe. How much water do you really drink while trading? Why? Because the more you get tensed, the more your blood gets thicker. You need more oxygen, and the oxygen is carried by your blood. Now, a lot of traders tell me, Vijay, I'm so involved in my trading, I'm so passionate, I'm so dedicated to my trading that I can hold my pee for 2 hours even if I want to go and leak at 10 o'clock in the morning. I go at 12 noon. Saying, man, you don't really have a future in this market. Number one, you should hydrate yourself. I drink a little bit of water every 45 minutes. My blood has to be thinner. I can't have lack of oxygen going to my brain to cloud my decision. If I want to take a piss, I will go and take a piss. If I feel like taking a 1 hour walk, I'll go and take a 1 hour walk. I am not a slave to the market. That's what mobile phones are for. If you're going to get captured by what you're doing, you're not free. The idea of having money is to be free. So your thought process, your trading psychology itself is all wrong. So what have I told you so far? Everything basically boils down to trader psychology. The numbers that we crunch, the TSTs, the MWPL, the churn ratios, the tick list, the snap quote windows. We are doing statistical analysis for sure, but in the larger scheme of things, we are basically behavioral finance scientists or students, let's call it. Scientist is a very arrogant word. I didn't go to a university where I qualified as a behavioral scientist, PhD or something. So yes, I am a lifelong student of the subject. But at the end of the day, everything that I am doing is basically trying to do what that American trader won in that contest where he picked out 7 beautiful girls, is to get into the head of the other guy and see how everybody else is thinking so I can place my bets accordingly. It's all about that. What do I see on my statistical and behavioral trading models of late? Of late, what I'm seeing is that traders are trading. But are they enjoying their trade or are they really going because of the Tina factor? Tina is there is no alternative. I'm sorry if I'm breaking your heart. A couple of guys on social media told me, Vijay, your posts can sometimes be upsetting. We look forward to your posts, but at least don't give us bad news. Don't. Hey, if it's a fact, it's got to be said. So, are traders trading because they're enjoying it or is there strain in the trading? I think a lot of traders are going on because of the Tina factor, because they don't know anything else. They enjoy trading. They're addicted to trading. They may not be profitable in their trades, but they're going ahead. And the biggest dead giveaway is the ticket size per trade. It's telling me that traders are trading, but they're extremely jumpy. You know how when you're running from the law, you're a thief, you're running from the law, you know what you do? You look back all the time. Who's chasing me? Is there a cop chasing me? Am I going to get arrested? Am I going to do jail time? The ticket sizes per trade tell me that traders are looking over their shoulders all the time. They're extremely nervous. Not a good sign. If they were confident, I would have bought a whole lot more. But that's not the case. Now, what makes a jumpy market so different from a confident market? When the market is jumpy, when the market is nervous, and remember, prices are a reflection of the actions of all the participants at any given point in time. If you're going to have nervous traders, now they could be nervous for any particular reason. It could be because SEBI wants to take the derivative lot size between 20 and 30 lakhs 6, 8, 12 months down the line. It could be because the CTT, which is the Commodities Transaction Tax, or the STT, Securities Transaction Tax, is almost doubling to 2,000 rupees per crore from 1st of October. So their profit margins are going to fall. It could be because they are being hit by the volatility or statistical beta, which I've been telling you since a long time in the markets. It could be because the spreads are widening on your snapquote window of late, which I'm noticing. But when traders are jumpy, when their collective actions are telling me that they are looking over their shoulders all the time, they're vulnerable and exposing their flanks to making mistakes. And when they make mistakes, when a retail guy makes mistakes, the statistically savvy guy eats them for lunch, just as a lion or a tiger eats the slowest running deer. That's going to happen a little more often than it's been happening so far. What you have seen from April 2020 was easy money. What you will see in 2025 onwards is going to be challenging to maintain the kind of profits that you have made this far, which is why I've made these videos about pro-cyclicality and what you should be doing in these markets. Friends, I'm very eager to know how part 1 and part 2 of these videos have been received by my online family. Depending on your feedback, and I'm recording these videos for you, I would love to make more videos on the subject and many other subjects. But hey, I need views, and those views, like other statistics, will tell me whether guys want this subject or are my media friends right when they say it's a boring subject. All right. So let me know in the comment segment. And if you haven't subscribed to my YouTube channel, please click on the bell icon and hit the subscribe button. Share this video with smart guys who are your friends, your social media groups, your WhatsApp and Telegram, Facebook, LinkedIn, whatever. Thank you for sticking around in these long videos. Thank you for your patience. Till we meet again in my next. This is Vijay Bhambwani signing off for now. Have a very profitable day ahead. Take care.